Dia, Dio, Emma, Pam.
Hello and welcome to our live session today with Peter. So, how have the markets settled down?
Well, we had definitely decisive action taken by central banks. It was characteristic, the joint statement which was made by the Fed, BOE, BOC, ECB, BOJ, and the Swiss National Bank. So practically the central banks, the main central banks, seem to be standing united and are determined to prevent another 2008 type meltdown from actually happening. And that tend to provide some confidence in the markets, in my opinion. Definitely the fact that the Swiss National Bank forced UBS to take over Credit Suisse also tended to provide some reassurance, despite actually shareholders being favored over bondholders, which was a bit of an issue, at least on a legal level. Yet overall that, I wouldn't say passed under the radar, but still was neglected by the market in the sense that, okay, even in this way, we have some easing of market worries. So I would expect that should there be no further surprises, we may see slowly but steadily the market starting to normalize.
How about US stock markets?
US stock markets actually yesterday were in the greens. We had a slight boost of confidence. It was a good start for the week. I would note though that it's still not convincing enough. So I would require some more bullish tendencies on all three major US stock market indexes. That would be S&P 500, NASDAQ, Dow Jones. And should that be the case and they escape the sideways motion of the wide sideways motion of the past 3-4 days, that could provide some support in the sense that it would imply practically another boost of confidence, which could be leading to a virtual, or if you prefer, a cycle of virtue. So things are looking up, but are still a bit uncertain. I wouldn't be betting my horses here.
What about gold prices?
Well, gold's price was on the rise. There was definitely a beneficial effect for the precious metals price given US dollar's weakness. I would be highlighting once again the negative correlation between the US dollar and gold as trading instruments. On the other hand though, should the US dollar start rising, and it's going to be heavily dependent on the developments and financial releases as well as monetary policy events in the next couple of days up until the end of the week. Yet should the US dollar start to rise, we may see gold's price starting to ease. And that's something which, mind you by the way, that gold's price reached very high levels. So also on a technical level, some correction lower may be in the cards.
And what's on the calendar for today?
Well, right about now, we should be getting German CEF indicators. They're a little bit forward-looking, and therefore the current month for March. There does not seem to be a substantial improvement either on the economic sentiment, so practically the optimism of investors does not seem to be getting a boost about the next 6 months of the German economy. And the current conditions do not seem to be improving substantially. So overall, I would expect some weakening of the euro here. Actually, they're worsening just a bit. And in the American session, I would note definitely the release of Canada CPI rates. And we tend to focus practically on the BOC core CPI rates. Now, should the CPI rates accelerate, that could provide some support for the CAD. Yet, I sincerely doubt whether even an acceleration of the CPI rates would reverse, I wouldn't say the decision, but the stance of the Bank of Canada, which practically remains on hold. There is also some degree of uncertainty about the Canadian economy, or if you prefer, the effect of the SVB fallout on the Canadian economy. So I would be expecting BOC to maintain a rather cautious stance. A possible weakening of, or if you prefer, slowdown of CPI rates, on the contrary, could enhance the dovish stance of BOC.
And how about the rest of the week?
As for the rest of the week, I would make a start with UK CPI rates. There for February. The cost of living crisis in the UK is a major issue. Mind you that we have also BOE's interest rate decision on Thursday, so the bank is definitely going to be keeping a close eye over the CPI rates. A possible slowdown could weaken the pound in the sense that it would allow BOE to adopt a more cautious dovish stance. The highlight of the week, though, is expected to be the Fed's interest rate decision. That's also tomorrow in the late American session. We had market expectations jumping up and down through the roof over the past few days. There were discussions about a possible 50 basis points rate hike. Some analysts even suggested that the bank may remain on hold. I would say that over the past 2 days, that would be Friday, Monday, market expectations seem to be solidifying towards a 25 basis points rate hike by the bank. But, okay, there could be some support here for the US dollar should the bank actually hike rates by 25 basis points. Yet we would highlight that Fed funds futures imply a probability of around 80% for such a scenario to materialize. So it has started to be priced in substantially. The second issue of the Fed's interest rate decision would be the forward guidance. Should the bank more or less imply some hesitation about continuing to hike rates, that could be weakening the USD. Also, I would be noting the release of the new dot plot. Now, the new dot plot would be showing us what the terminal rate is expected by Fed policymakers. And I wouldn't be surprised to see a terminal rate which is the same as the previous one or even a little bit lower. Such a scenario could weaken the USD once again. Last but not least, we're getting the new economic projections of the bank. Should the Fed actually see the US economy skipping a possible recession, or even should there be one, it would be a shallow one, that could provide some support for the US dollar. Then we have on Thursday 4 central bank interest rate decisions. I would start with the SMB, which is quite a puzzle, given that we had the turmoil of Credit Suisse and the Swiss economy. The bank is expected to hike rates by 25 basis points. I think that should that be the case, we may see the Swiss franc getting some support here. I would be also noting from Norges Bank that there is a quite strong possibility of a rate hike, a 25 basis points rate hike, which could provide some support for the NOK. And to that end, practically, the comments made by Norges Bank governor in the last meeting were characteristic. I would be also noting from Turkey CBT's interest rate decision, most analysts tend to highlight the possibility of the bank remaining on hold, keeping the 1 week repo rate at 8.5%. I would here add a small advice of caution. We may see the bank cutting rates once again. aiming for 8%. And such a scenario may take the markets by surprise and could weaken the Turkish lira. Other than that, I would be noting on Friday, we're getting the release of Japan's CPI rates. A possible easing of the rates, slowdown of the rates of the CPI rates, could be more or less easing the pressure on BOJ to tweak its monetary policy into a more hawkish stance. While I think the highlight of Friday would be most probably the release of the preliminary PMI figures. Now, we highlight here Eurozone's preliminary PMI figures. They are for March. Should there be another contraction of economic activity, especially about Germany's manufacturing sector, we may see the euro slipping. And that's a big issue. Also, by the way, note that on Friday we're getting UK's retail sales growth rate, that's February. And from the UK, we're also getting on Thursday the release of BOE's interest rate decision. Now, there is an expectation that the bank is going to hike rates by 25 basis points. GBP/ORS, though, imply that the possibility for such a scenario is marginal. The market seems to be split between the possibility of the bank remaining on hold and hiking rates by 25 basis points. Should there be a rate hike, that could provide some support for the pound, and it's a big but, in the sense that BOE in its last interest rate decision had hinted that it may be nearing the terminal rate. So should the bank imply in its forward guidance that it will be remaining on hold, or at least start pausing its rate hiking path, that could turn a possible hike into a dovish hike and weaken the pound.
Thank you, Peter. Stay tuned for our next live session with Peter.
So, welcome to the technical analysis part of the presentation for today. My name is Peter Yosef, Senior Market Analyst at IronFX. In front of your screens right now, you have the US dollar index. It's the 4-hour chart. All charts to be presented are to be of the same time frame, unless otherwise stated. Now, we see that there is still a downward motion of the US dollar index. Let's extend the downward trend line a little bit. It's characteristic that the price action broke below the 103.05 support line. Even the former S1 103.05 has provided some resistance during today's European session, and the index has started to roll down once again. So the first thing to do is definitely we have to switch the support line into a resistance line, given that the price action has broken below it. Let's go hunting for a new ultimate support line. Sorry, 1 minute. Here we are. Now, in this case, I would be noting this true here. Now, some of you guys have mentioned that it's 110 pips difference between the S1 and the S3, which is quite valid. As the 102.45 and the 101.35. It's a bit of an issue. However, I would be highlighting that we had an intense sideways motion here, which validated the levels. So I'm keeping that. I know it's a little bit far off, but still, I think they're valid. Now the new S3 is going to be placed definitely in green, and it's going to be the 165 support level. Let's correct also the labels. Starting by repositioning them. Now there's one, the R1 substantially lower, the R2 definitely lower, and the R3. So the R3 now is being placed at 104.55, the R2 at 103.75, the R1 at 103.05, the S1 at 102.45, the S2 at 101.35, and finally the S3 at 100.65, locking everything in. Feel free to write any trading instrument you would like to have a look at. We're here for you guys. Maybe we could help you out a little bit. Now, regarding the US dollar index, we have a nice downward trend line guiding the index. That's pretty clear. Even the fact that the price action has broken below the 103.05 and that acted as a resistance line sort of tended to enhance the possibility of a bearish outlook. We tend to maintain our bearish outlook, and hence we set as the next possible stop for the bears the 102.45, a level which was tested here and to the upside here. While even lower we have the wide drop of 101.35. Note the RSI indicator is around the 33, which is pretty low, also implying a rather bearish sentiment. Note that all three major moving averages, the 100, the 50 green, and the 20 moving average of the Bollinger Bands, all have a downward movement trajectory. So that tends to highlight the bearish movement as well, as do the Bollinger Bands. They have shifted to the downside. Should the bears though slowly start stabilizing, the index slowly start stabilizing, we may see the price action of the US dollar index breaking the downward trend line. Yet at the same time, I would expect it to respect the 103.05 and the 102.45. So it would be a movement in this spectrum. On the other hand, should the bulls take over, despite that seemingly being a remote scenario, it's still a possibility which should be covered. We may see the price action of the US dollar index reversing direction. Definitely we would require a breaking of the downward trend line, which would be signaling also a change of trend, but we would also be requiring a breaking of the 103.05 resistance line. That would be implying that a bullish scenario has started to kick in. Let's have a look at Euro USD. Nice upward movement. Overall, we tend to maintain the view for bullish outlook, yet I would require clear breaking of the 1.0760. I would require practically a higher peak than this one. Mind you that the RSI indicator is pretty high. It's at 66.3, which tends to imply also bullish sentiment on behalf of the market for the pair, which may allow it to actually break above the R1 1.0760. The upward trend line supporting it. All of that tend to align towards a bullish outlook for the pair. We set as the next possible stop after the R1, the R2 1.0925, a level which provided resistance once, twice, 3 times. So it was tested extensively. On the flip side, should the pair decide to remain in the current sideways motion, that would be the case if the pair hits a ceiling at the 1.0760 resistance line, drops, breaks the pre-mentioned upward trend line, yet remains in the spectrum between the R1 and the S1. For a bearish outlook, we would require rather intense movement, as we would require the pair to actually break the upward trend line, but also break the 1.0525 support line, starting to aim for the 1.0310. So it would be a movement like breaking the upward trend line, breaking the S1, and moving downwards. Moving now to cable, as always the 4-hour chart. Interestingly enough, we have 2 elements here. Let's readjust the chart a little bit. On the one hand, we have that slight break of the 1.2265. Note how the pair corrected low afterwards. I would be noting though that it's about to test the upward trend line guiding it. As long as the upward trend line remains intact, I tend to maintain my bullish outlook. Also due to the fact that the RSI indicator, despite correcting lower, it's still at pretty high levels. It's currently at 68.6. So the bears, so the bulls have not exactly left the field just yet. It's going to be interesting to see whether that bounces on the upward trend line or not. It may also be the case that it shifts the upward trend line a little bit to the right. But for the time being, I think the bullish sentiment is still present. Should the pair stabilize, that would be signaled definitely by breaking of the upward trend line, possibly remaining below the 1.2265. While on the flip side, should the bears take over, we would require once again a breaking of the upward trend line, which would be signaling a change of trend. But we would require it also to break below the S1 1.2105, a level which is supporting the price action of cable right now. Let's have a look at USD-JPY. USD-JPY, which seems about to break if it hasn't broken already. The downward trend line guiding it, so we may be about to switch our bearish outlook in favor of a sideways motion initially. It's interesting how also the RSI indicator has approached the reading of 50, implying a rather indecisive market. Should the bulls take over, which is quite a possibility, we may see the price action breaking above the 132.55 resistance line and start aiming for the 135 resistance level. It's interesting that the break of the downward trend line was not sensed just yet by the moving averages, the 50, 100, and 20 moving average, as they still maintain a clear downward trajectory. And it's also possible that the pair hits a ceiling at the 132.55 as it did practically here, and in which case, or maybe even breaking it a little bit to the upside here, false break, and that would allow practically the price action to drop once again downwards towards the 134.40 support line. The yen is an interesting pair. It's going to be a very exciting issue whether it will be able to actually break the downward trend line. That would be signaling also a stopping of the strengthening of the yen with wider possible repercussions. Okay, let's have a look at USD-CHF. We're moving rather hastily today. USD-CHF, which seems to maintain a sideways motion. It's as if the market maintains practically a wait-and-see position, and that's between the 0.9335 and the 0.9240. So we remain on a sideways bias for now. We keep it intact. Also, given that the RSI indicator is running along the reading of 50, it's actually at 49.6, which may imply more or less, once again, a rather indecisive market about the direction of the pair's next leg. And that could allow it to actually maintain its sideways motion between the pre-mentioned levels, the R1 and the S1. Also note how the Bollinger Bands, the upper Bollinger Band and the lower Bollinger Band have converged, more or less implying low volatility for the pair, which once again may allow the sideways motion to continue. So the base scenario is a continuance of the sideways motion of the pair between the R1 and the S1. Now, should the bulls take over, I would expect the price action to break above the 0.9335, a level which provided resistance here and was aimed for here, with the next possible stop being set at 0.9440. You can see that there was a wide swings here, and the level was tested once and aimed for here. So it's a pretty valid level. At least it signals or sets the upper boundary of the past sideways movement of the pair, and that was near the beginning of March. Let's have a look when exactly. It was from the 24th of February actually, up until, I would say it here, the 9th of March. On the flip side, should the bears take over, I wouldn't be surprised to see the price action breaking the 0.9240 support line, a level which provided support continuously. You can see it here, but also resistance here and here. It was broken a couple of times, okay, a number of times actually. But still, I see the validity based on the price action's movement over the past, I would say, 4 days. Yep, since the 16th. So, should the bears take over and the S1 breaks, then we set the next possible target at the S2 0.9140, a level which provided support here and here. It's a pretty wide drop as well. Let's have a look at commodity currency AUD/USD. Okay, we have a number of interesting elements here. The first is that the pair was having upward movement, which has been broken. I think it's more obvious if we drill into the 1 hour chart. Allow me, please. Yeah, there was a nice, slow but upward movement. Note that we have higher consecutive higher peaks and higher truths up until here. The lower true exactly signaled that the pair is about to stabilize. Now it hit on the upward trend line once again, yet the next peak was lower than the prior one, and then it started to fall. It's a very smooth, I would say easygoing movement, yet definitely the upward movement was interrupted. It's characteristic also that the RSI indicator has dropped from the reading of 60, that was yesterday, just below the reading of 50. It's currently at 47.5. So I think there's a relative indecisiveness in the market about the future direction of the pair. I would expect that to allow the sideways motion to continue, most probably between the 0.6695 and the 0.6585. For a clear bearish outlook, we would require a breaking of the S1. So the pair has to drop and break the S1 0.6585. Note how the level was aimed for here and tested extensively in this sideways motion here, which, if broken, allows the pair to start aiming for 0.6460. Before that though, let's have a look where the S2 actually rests on. So it was a former resistance line, but also support line. So it was tested, and we could be expecting that to hold. Back to readjusting the chart. Should the bulls take over, we may see the price action of AUD USD rising, breaking the 0.6695 and start aiming for 0.6855. On the other hand, a possible sideways motion could occur, and that's our base scenario for now, should the pair respect the R1 and the S1 and trade in this range. Okay, let's have a look at USD CAD. USD CAD, which is actually testing right now the first support line, the 1.3665. Okay, there is a downward trajectory, yet if we drill to the 1 hour chart, you can see that the pair is hitting a floor at the S1 as it did in the past. So the S1 seems to be holding its ground, the 1.3665. And this teasing though tends to imply some bearish tendencies. So for the time being, we would require clear breaking of the S1 and the price action to start aiming for the 1.3525. I wouldn't expect something intense. I would expect though a clear drop below the S1, maybe 20 pips below it, 10 pips below it, which would be signaling that the bears have it. And that would allow also the downward trend line to be maintained. On the contrary, that may force the RSI indicator, which is currently at the reading of 40, to drop a little bit lower. On the other hand, should the pair remain rather stable, say for example, cat traders become frustrated that the pair is not able to break below the 1.3665 and start selling the loonie, in which case we may see the pair rising, breaking the downward trend line we have just drawn, yet remaining between the 1.3805 and the 1.3665, something in this spectrum here. It's going to be interesting. On the other hand, a bullish scenario, however remote it may seem, it's still a possibility, but it would require a quite strong movement, intense movement to the upside, which may be something like rising, breaking the downward trend line, first signal of a changing trend, but also breaking of the R1 1.3805, which would be signaling that we're switching not only from a downward motion to a sideways motion, but to a bullish movement. Next possible stop is being set at 1.3975. Let's have a look at the validity of the level. The R2. Okay, nice touch here. That should be it. I'm drilling out to the daily chart. It was a high point. Okay, back to the forward chart. Readjusting the chart. Should the S1, it's testing it right now once again. Should the S1 be broken, the next possible stop we have mentioned would be the 1.3520, a level which provided support here, resistance here, and here. So it was tested on both sides. But for the time being, I wouldn't expect anything so dramatic as to reach the 1.3525. A mere clear break of the S1, as we have mentioned before, 20 pips lower, would be, in my opinion, confirming the downward movement. Let's have a look at the Kiwi. Okay, it's interesting to see whether there has been a break or the upward trend line has just been shifted to the right. The pair is actually right now testing the S1 0.6190 and at the same time testing the upward trend line. Should the bulls take over, we may see the price action actually bouncing here and start rising, breaking above the 0.6270. For a bullish outlook, we would definitely require a higher peak than this one. So we have to see the pair having continuous higher truths and higher peaks. That's why we require a clear break of the R1. Nothing less than that is actually suggesting a bullish outlook with the exception of the upward trend line. But it's a big question whether there is still an upward movement and the pair is just correcting lower, or whether we are about to witness a change, or if you prefer, another change of trend. Should the price action of NZD USD stabilize, say, just below or around the 0.6190, that would imply practically that the pair will break the upward trend line, signaling a change of trend from a bullish outlook in favor of a sideways motion. On the flip side, for a bearish outlook, we would require the pair to drop by breaking definitely the S1 and the upward trend line and aim for the 0.6090, a level which provided support here and here, preferably to break it. Now, it may seem like a lot, but in my opinion, within the next 24 hours, it's doable if the bears are strong enough. And it's characteristic if we drill to the daily chart. You can see that this distance was covered within one day, even more here or here. And it's actually quite feasible for the pair to reach up until and even breach the R2, the S2. Let's have a look at gold's price, drilling back to the 4-hour chart to begin with, readjusting it. XAU USD. Ladies and gents, do we have a reversal? Oh, it's about to test it just right now. it's interesting how the precious metal shoot up, breaking all support lines, which have now to be turned into resistance lines. Sorry, it broke all resistance lines, which have to be turned down to support lines. It's now trading at 19. That would be 65, 66. Pretty high. I doubt whether we'll be able to find exactly resistance levels higher than that. It was interesting how it tested the 2000 area. It visited for a brief while the 2000 area before correcting lower. Okay, let's go hunting now. The S1 seems to be resting on this peak here, so I would keep that. Let's go hunting for the resistance lines. So there's a resistance line right here. Could be a little bit higher. Yeah. And that would be in red. 1994. Locking it in. Definitely this peak will be serving us, and that will be the 2070 as the ultimate resistance level. And I would be also noting this mid level here. 1, 2, 3 touches. I think in the 1 hour chart it would become clearer. Does not allow me to go further back. I have to download the history. Back to the 4 hour chart. Oh my, that was a mistake. 1880. Yep. $20.20. It's a little bit narrow, but I think it's valid. Maybe 2021. Yeah, that's better. 2021 it is. We're adjusting the chart. Starting with the R3 at 2070. With the next level being the R2, 2021. First resistance line being placed at 1994. First support line at 1960. Let me confirm that first. Yeah. Second support line being placed at 1928. and final support line being placed at, let's have a look, 1880. So let's discuss direction. On the one hand, we have an element which is called upward trend line, ladies and gents. You can see it beginning since around the 9th to the 10th of March and actually guiding gold's prices higher. Yet we have to note that after the peak 48 hours ago, the pair seems to be correcting lower. There's a big question whether the price action is merely correcting lower or has started to change its trend. At this point, I would be advising also to have a look at the RSI indicator, which is dropping and has reached actual reading of 59 and still falling. So the RSI would be implying here that the market slowly but steadily gets out of the grip of the bulls. The bullish effect at least seems to be fading away. Should the upward trend line be broken, as should also the 1960 support line, that would be, in my opinion, a clear indication that the bullish movement has been interrupted. And then the next question would be, what's the next movement? Is it going to remain stable or is it going to start falling? Now, should the price action remain near or just below the S1 1960 or even slightly above it, we may see a stabilization of the precious metals price. So that would imply sideways motion bias. On the flip side, should the S1 be also clearly broken and the precious metals price starts aiming, if not reaching, also the 1928 support level, that would be a signal, in my opinion, for a bearish movement. Now, for a bullish outlook, we would require the precious metal to actually bounce on the upward trend line, maybe even shift it a little bit to the right, and in which case we may see it once again taking a swing, breaking the 1994, and start aiming for the 20,021. We have still a couple of minutes. Let me have a quick glance at your stock markets. This is Dow Jones. Note that the index is exactly trying to escape the sideways motion it had over the past few days. It's actually right now testing just above the 32,500. Now, should that be a clear break, we may see a bullish movement being formed, which may allow us to start drawing on an upward trend line, something like this, but it's way too early for that. We will need to see higher peaks, higher troughs in order to actually rest the upward trend line, which would allow us to see also the limitations of the upward movement. The RSI indicator seems to be also implying that the bulls are getting a grip over the movement of the index. It's characteristic that it's currently at the reading of 60 and rising. And let's have also a quick glance at WTI prices. I think they interrupted their drop. Let's have a look. Yeah, here it is. So you can see that there is a nice downward trend line here, which was interrupted during today's Asian session. So we would have to make some new support and resistance lines, definitely, as all the levels have been broken. Definitely there is a support line here, which is the lowest true. And after that, the big question is the direction. The RSI indicator has been rising and has reached the reading of 50 and is leveling out. Should that be the case, we may see the pair stabilize in practically this channel here. It's going to be an interesting level. Okay, guys, so that should be it from all of us here at IronFX. Best wishes for solid trading.
Hello, my name is Christina and welcome to another educational video. The terms mine and yours were used by traders on the trading floor to signal buying and selling of securities. The term mine was a buy reference while yours was a sign that an individual wants to sell an order. These terms were used with other similar terminology in the open outcry system. This system refers to the trading pits before 2010, where traders used verbal communication along with hand signals to convey trading information. In these marketplaces, large group of dealers and brokers engaged in competitive buying and selling. The words mine and yours were used to express the intention to buy or sell, respectively. Both buy and sell were also common. For instance, a dealer in the interbank market might type or speak mine to a counterparty of broker if they wish to purchase a specific currency. The trader will say yours, signifying it's yours if they were to decide to sell. In the same way, if a floor broker offered 100 call option as $1 each and a market maker decide to purchase them, they could respond by shouting mine to indicate their intention to do so. Both of these words were used to enable quick and precise transactions in a market that was frequently chaotic and active. Today, the words mine and yours are both still frequently used, mostly in the Forex market. Additionally, they continue to be employed in the same context as they did under the open outcry system. Thank you for watching.
Okay, welcome everyone to today's session. Today's session, we're going to touch on Fibonacci confluence, right? Particularly the Fibonacci confluence trading strategy. As the name suggests, right, confluence means there's not only one level there, but there are multiple Fibonacci levels that line up exactly there, right, to create a high probability reversal zone. Okay. Now, as usual, remember, if you have questions, don't hesitate to ask it anytime throughout the webinar. Right, I'll do my best to get to them, right? And of course, to begin, right, risk warning. Remember that everything in this webinar is educational in nature, so please do your own little due diligence before you guys trade. Nothing should be construed as investment or trading advice. Okay. Now, so for those of you guys who do not know who I am, my name is Desmond Leong. I run the award-winning research firm Everest Fortune Group, also Forex Army, right? I'm finalist for the best FX and best equity research in 2019, 2020, and 2021, right? So recently been taking a couple of prop firm tests too, right? I think my Forex funds is the most recent one that we passed, right? And yeah, it's today's webinar will focus on the Fibonacci confluence trading strategy and how I actually use it. All right, it's a reversal strategy. Okay, it's a reversal strategy, so it works really well when in overbought and oversold situations. But you do need to have a lot more confidence when you use it, right? Meaning that it's usually against the market. So if I have my pen over here, right? And my pen over here, usually when you're taking a reversal trade, the market is going against you, right? It touches and then it reverses. This is what we call a reversal kind of contrarian style of trading. It's slightly different, right? So it's not the usual breakout trading. So most people are comfortable with a breakout trading, means that price breaks out and they play all the way down, right? This is because, you know, when price is dropping very strongly, you feel a little bit more comfortable trading the direction of price, right? But the Fibonacci confluence trading strategy is slightly different, right? It actually plays the reversal, right? It actually plays the reversal. That means you need to have a little bit more tolerance for risk, right? Especially when you see prices coming down and then you choose to play in the opposite direction. Okay, it's a lot scarier, right? But it can also be a lot more rewarding because you can get a pretty good risk to reward. Okay, now let's begin today's session. Right, I'll be touching on a couple of things here. Questions, remember to feel free to send it through directly to me. Send it in the Q&A part. I'll do my best to answer them. Okay, let's begin today's session. Okay, so let's first touch on ideal market structure. Okay, ideal market structure, right? So this is the part where okay, there you go. When you're trading Fibonacci, right? When you're trading Fibonacci, right? One of the things that you want to do is you want to look for ideal market structure, right? You don't want a market that is too it's like too messy, right? You want to look for the markets where, you know, there are very, very clear movements, right? And this is what I mean by that, right? You need the markets with very, very clear movements. You want to look for the big movements. You don't want to look for the small movements like this. Okay. Now, let's of course move on from here, right? There are two things that you need to take note of when it comes to drawing Fibonacci, which forms the basis of our entire trading strategy, right? When you draw Fibonacci, you'll notice that there's this dotted line that goes all the way through when you're drawing it. This dotted line needs to follow price as closely as possible, right? It needs to follow price as closely as possible to be profitable, no, to be accurate and relevant, right? So in this example, when price is like moving in this direction, the Fibonacci retracement is not very effective because price tends to deviate quite far. Price tends to deviate quite far from the dotted line. You compare that with this. When you draw a Fibonacci retracement like this, from here to here, you notice how nicely price follows it, right? Even from here to here is okay, right? It deviates just a little bit. In these kind of situations, the Fibonacci is a lot more effective because it follows price more accurately. Okay, so that's the first two things that you need to take note of about market structure. Okay, that's the first two things you need to think about when you're drawing Fibonacci retracements. Your retracement should ideally follow prices price structure as closely as possible, because only then will it be can you get an accurate Fibonacci retracement. So I just need to drink a bit. My throat, oh shucks, my throat is hurting a bit, so I do excuse me if I take a couple of sips here and there. And of course, when I accidentally spill it on my mouse, oh god, just give me a second. Okay, now let's continue, right? So this is the correct way. Now, a Fibonacci, let me explain to you what's a Fibonacci retracement, a Fibonacci extension, a Fibonacci expansion, and a Fibonacci projection. Okay, there are four different things and they are used differently. So if you know how to use them, that actually unlocks the secret to trading. If you ask me personally, right? Unlocks the secret to trading if you know how to use this properly. Okay. So for example, Fibonacci retracement, you only pick one point and you pick a second point. Okay, when you pick 2 points, you then be able to your starting point and your ending point. You're trying to see how far price will then retrace upwards. Okay, so you tend to have a few traditional 23%, right? 38%, 50%, 61%. This basically means like how far you're retracing. If you retrace 50% of the entire move, that means if the total drop was 100 pips, right, and you retrace 50% of the move, it means that it's a 50 pip, price has moved back up by 50 pips. Okay, so that is basically what it means by Fibonacci retracement, right? 23, 38, 50, 61, all these different numbers, it basically is simply, right, the percentage of the move, right? So if price comes down and drop all the way here, if it bounces up by 50%, it basically means that it has retraced 50 pips, right? Assuming the drop is 100 pips. And if it retraces more than that, right, this is the 61, this is the 78, right? It basically means how much of the original movement it is recovering from. Okay. Now the next thing we do is Fibonacci projection. Fibonacci projection is a little bit more complicated, but it basically means you are taking, you see the starting point here and the middle point. Okay, you are taking the distance of the starting point to the middle point, right? You're taking the distance, like let's just say the distance is 100 pips, right? And you are projecting it onto here, which is another 100 pips. Right, so that is what it means by 100% Fibonacci projection. Okay, it means that you're looking for price to touch and then bounce from there. Okay, we are looking for price to touch and then bounce from there. So that is basically what a Fibonacci projection means, right? I'm going to erase it over here. I'm going to draw it again for you. Very simply, Fibonacci projection means that you're taking the distance from, if you have a movement like this, you're taking this movement, it could be 100 pips, and you're projecting it over here, maybe another 100 pips. This is what I mean by a 100% Fibonacci projection over here, right? So we have stuff like the 100%, we have the 61% projection, we got the 78% projection. All of it basically means that, you're taking the distance and you're multiplying it by 61, 78, or 100, right? When you're forecasting when the reversal is going to happen. That is the meaning of Fibonacci projection. Now let's talk about Fibonacci expansion. It kind of looks like the same thing, but you only have one starting point and one ending point. Price must minimally retrace at least 50%. Minimally 50%. So if it retraces to 61 or 78 is fine. What then happens is that you forecast price to go up to reverse off the negative 27% level, right? And you can see that has happened very nicely over here, right? So this is the trick to Fibonacci expansion, right? You are literally just forecasting when price is going to reverse, okay? We're literally just forecasting when price is going to reverse right here. Okay, it's a very, very important rule too, right? Because it is one of the few market leading indicators out there, right? It's one of the few market leading indicators to help you like forecast at what point in the future is price going to reverse. Very few other indicators are able to do that. Okay, guys. Now the last one I'll talk about is called Fibonacci extension, right? So Fibonacci extension, I call it like a Nike tick. You have your starting point of your Fibonacci retracement here and your ending point over here. It will then retrace two key levels, 127 and 161.8. Those are the important Fibonacci levels that you need to refer to. Okay, and once you rise up, right? Once you rise up to the 127 and 161, what happens is that price tends to reverse from that level. Okay, so that is what we call a Nike tick. Nike tick is very, very straightforward. Okay, a very, very straightforward setup, right? And you're looking to play the reversal from the 127% or the 161.8%. I'll be showing you some examples of this later. But the key thing here is that we have looked at Fibonacci retracement, extension, projection, and extend. The four Fibonacci, four types of Fibonacci. How we're going to use that is this concept called confluence. Okay, it's this concept called confluence, right? So as you can see, we can start with the Fibonacci projection, 100%. We can start the Fibonacci retracement, expansion, extension, and we found 1, 2, 3 reasons why price might bounce off this area. So this is the meaning of confluence, right? You line all of them up together, it creates a nice area. And what happens is that when price tests that level, tests the area, it tends to reverse very nicely, right? Because you have not only one, but you have 2 and 3 reasons why price might bounce from that level. Okay, so that is the concept of Fibonacci confluence, right? You don't just trade it you don't just use a single Fibonacci to trade it. You combine multiple of them together to be able to execute the trade, right? Usually it's a reversal trade. Okay, guys. Now let's look at some examples, right? So we take some time to look at a couple of examples on using Fibonacci confluence. Okay. Just let me, I probably need to turn off my video over here just so that it doesn't mess with the charts. Sorry, just let me load this. Let me just make a copy, right? Okay, let me show you some examples of Fibonacci confluence. We try to look for them together. Oh, sorry. We try to look for them together, okay? So I usually have my Fibonacci retracements when I draw it. I have this thing, all the different Fibonacci levels over there. When I use all fibs, okay? When I use all fibs, it actually shows me everything. So over here, the middle part is what I call Fibonacci retracement. And once it retraces beyond the 100%, this is what we call Fibonacci extension, EXT. And if it comes down here and it comes further down, this is what we call Fibonacci expansion. Okay, these are the 3 types of Fibonacci, right? We got the retracement, we got the extension, and we got the expansion. And these 3 will actually unlock a lot of the key secrets, so how you can call reversals. Okay, let's take a look at some examples. We're looking at euro dollar now. Actually, let's look at pound dollar. When you draw a Fibonacci here to here, what do you notice, right? I'm just going to highlight one key level, 127%. You will notice I'm going to do a bar replay feature over here, right? That price actually went all the way up, right? Price went all the way down. It went all the way up. It touched the 127% and it retraced back to the 100%. This is a very, very good trading strategy, which I use by myself, right? I use myself and I reached a decent amount of profit, right? I see if I have the picture over here, right? But basically, just let me see if I have it. There you go. You know, it's a good 8% that we made over here already. So as you can see, let's do a save as a detailed report. Yep, detailed report. There you go. Right. Yeah, basically, it's a good amount of trades that you see over here, right? You got about an 8% profit, right, with a 2% drawdown. It's enough to 2.7% drawdown, 80% win rate for short position, 50% win rate for long positions, right? Right. Most of our trades were profitable, 65%. So it's a nice 65% hit rate, right? Pretty good risk to reward. Like average profit is 1147, average loss is 920. So, you know, managed to make pretty good, decent money with this setup. Okay. Now it is the setups I took was purely from here, right? We take the reversal of the 127 and play it down to the 100%. Okay. Now the success of this strategy lies in confluence. Sorry, just give me a second. The success of this strategy lies in confluence. Okay, what do I mean by confluence? In this particular setup, right? If I were to do a bar replay feature, so I think it was a 4-hour chart. Right, in this particular setup, when we did the Fibonacci retracement, Fibonacci extension, I noticed there's a 127 over here. the 127 also happened to line up with this swing high resistance. Okay, this multiple swing high resistance, meaning that I have 127, I got one swing high, I got two swing high. So it's a high enough chance, you know, we got one, we got two, we got three reasons why price might touch this level and reverse. Okay, we got three reasons why price might touch this level and reverse. And true enough, from there, right, let's go bar by bar. Right, price actually comes up here, touches this level, and reverses very nicely. You can see it reversed and it reached our 100%. So this is what I call the Nike tick strategy, right? You're really just looking to play the reversal of 127 all the way down to 100. How you can improve this strategy is one of it, of course, having a very clear Nike tick, right? Very clear V that you're looking for. The other is when you combine it with support and resistance. In this case, we got swing high, right? Price reacted once, reacted twice. When price finally came up again, it was going to react again. So there were three reasons why price was going to drop. Okay, combine that at 127% extension, the Nike tick kind of Fibonacci extension, you got even higher probability trading strategy. Okay. Now, of course, you can combine it with different forms of Fibonacci. Let's try to see if I can find any over here. Let's see. I'm trying to find one with a little bit of a Fibonacci projection tool. Let me see if I can find a good example with one with a Fibonacci projection. Okay, this is one example. This is one example over here. So let me just make sure I get this right. So as you can see over here, right, very nice Fibonacci extension. This is a nice little Nike tick that you're looking at, right? You can see it's a very, very nice Nike tick. And it comes all the way up to here, this 127. Okay, I'm going to leave this 127% over here. Because at the same time, there's a very nice Fibonacci expansion, right? Remember the rule for Fibonacci expansion. The rule for Fibonacci expansion is that price needs to minimally retrace 50% of the entire move, right, before you can consider a bounce, right? So we got over here 127 and negative 27. So what we call a confluence area. This is a confluence area. Okay, so what then happens is that we wait for price to reverse from this level and play the move down all the way down to here. This would be where we play the reversal from and until. Okay, so here we go, right? So we can see price, you know, bar by bar, it starts to reverse, it starts to reverse. There we go. And price will have hit our take profit then. Okay. It's a simple enough reversal that you're looking for, but you notice that I will not trade based on the 127 alone. I mean, based on 127 over here, right, a zigzag Nike tick, right, 127 is already pretty strong, right? But if you throw in this Fibonacci expansion with a negative 27 up here, them combined, right, actually causes, you know, it gives you much more higher probability setup. Okay, Now, if you really want to really improve your probability of you getting a good trade, I believe you could throw in a little bit of RSI, because you can see over here for the RSI, right? When price was starting to do the reversal at the key level, right, it was a bearish divergence. Bearish divergence, and bearish divergence is when the price, the highs of the price is going higher, means it's climbing, right? And in this case, stochastic RSI is going down. So in this example, right, it's a bearish divergence, right? We have not only the 127, we have not only the negative 27, right? We also have a bearish divergence, versus stochastic, no, versus RSI. So that gives you a good probability that price is gonna drop. Okay. Okay, I see a couple more people over here, right? Let's see, Mr. John, right? Yosef, right? Damir, Mr. Damir, are you around? I just want to make sure that you can hear me clearly, right? If you can hear me clearly, feel free to send a message in the chat. All right, Mr. Damir, right? Okay, let's continue today's session, right? So this is an example of finding a Fibonacci expansion along with a Fibonacci extension. So this is expansion plus extension plus divergence. Okay, all three of it lining up very nicely to call this reversal over here. Okay, let me try to look for a couple more examples. Right, so we got Kiwi dollar. Okay, there we go. This example, I should be able to show you a little bit more confluence over here. So I tend to look out I tend to use the Fibonacci extension as the leading indicator of what might happen. So the Fibonacci extension usually works when you start to spot a letter V. Whether it's a V or inverse letter V, the moment you see it, right, it is time for you to start mapping out your Fibonacci extension, right? So the moment I notice this letter V over here, whether it's an inverse V, I start drawing a Fibonacci retracement from one place to another place. Okay, now that it's over here, what I then do is I will highlight the 127% Fibonacci extension over here. Okay, so we're looking for the reversal of a price to come all the way down to here, touch this 127 and come back up to the 100%. Okay, it sounds like a simple enough setup, but if you get it wrong, it can be very dangerous. Okay, so 127 over there. Okay, let's see how price actually panned out. Bar by bar, you can see it go down, go down, go down, go down, go down. It touched the entry, right? And it bounced back up to the 100%. It might even bounce before that, but yeah, it bounced up to the 100%, right? You see it come down, touch the 127, then it do a small little nice bounce. So this move is all you need to make money, right? You don't care about what happens after that, but this move is all you need to make money. Okay, yeah, so that's another example of using the 127 Fibonacci extension, right? I'm going to try to find an example for you where there's a Fibonacci projection. Okay, we got another example over here. Okay, in this example, right, we can see that price is starting to create a nice little ladder V, right? As you can see over here, right? It's starting to rise up nicely and it's starting to reverse. Okay, we look at the 127% extension over here and we're like, okay, looks interesting. I then do a Fibonacci projection with this as the top, the middle, the ending point. What we then notice, right, I'm just going to remove everything and leave the 127 over there, is that there is a 127 and there's a 78.6 Fibonacci projection, right? So it's all lining up over here, this area over here. That means my pending order will be in this region, okay? What happens when it's like this, right? We can see, let's show you. Price pass, touches that level, and it bounces back up, right? So you have been able to play this little bounce here, making you a fair bit of money, right? So it's all about finding the extension level and combining it with like other forms of technical analysis. You can use the Fibonacci projection, you can use a Fibonacci expansion, and you can use a Fibonacci retracement. So if you were to use a Fibonacci retracement in this circumstance, let me see if it works out. Usually it's a lot harder. Yes, usually a lot harder. Yeah, okay. We'll leave that out. Okay, so that is a great example of using Fibonacci extension with Fibonacci projection, right? I'm going to go through a couple more examples, guys. If you have questions, please ask them, right? Don't hesitate to ask them, all right? Try and find a few other good examples of Fibonacci. There we go, right? This is another really, really nice example, which might just line up with a bigger retracement story. Nope, right? But it might line up on the shorter term time frame. Let me see. You can see that price actually goes all the way down over here, and it's starting to form a nice little Nike tick, right? And it actually comes all the way here, touch the 127, right? And then reverse back down to the 100%. Okay, so this is another example of using a Fibonacci extension. The trick, guys, is really in finding the tick. It's not easy to find the tick, but once you find the tick, you know, you're a lot trading is a lot easier for you, right? The trick is really in finding the tick. Let me see, even in such a situation, can you find a tick? Yes, you can, right? And if you can find the tick, you probably can find the extension. Okay, you can find that. Okay, let me show you another example, a really, really good example. Okay. We can see price over here, right? It looks like it's going to form a nice little reverse Nike tick. Okay, so we take a Fibonacci retracement. We start from the bottom here and to the top. Okay, we got a nice 127% Fibonacci extension about there. At the same time, you know, you have a nice little Fibonacci expansion. Price goes down, retraces minimally 50%, right? But it doesn't kill you off completely. You know, so here we go, retrace minimally 50%. In this case, it retraces all the way up to here. Then looking for the move down. Okay, so here we go. Here, touch the 78.6, and we can see a negative 27% all the way down to here. This lines up with a 127% Fibonacci extension too. And of course, we got one more level, which is the major Fibonacci projection, right? From here, all the way down, all the way up. And we have a 61.8 Fibonacci projection here. So we got 1, 2, 3. We got 1, 2, 3 reasons why price might bounce, right? So we're going to highlight this area over here. Okay, I'm gonna highlight this area over here. And what we're expecting is for price to actually come down, touch this level and bounce up minimally to this level where it kind of broke out from. Okay, and this happens way too often, right? We can actually see price come down, come down, come down, test that level, and then it bounce up. As you can see over here, it bounced up and it kind of hit this take profit. Okay, this is one of the beauties of Fibonacci confluence, right? You find an extension, you find a retracement, you find a projection, you find an expansion, extension, right? All of it lining up together, at least 3 of them lining up together. It gives you a really good setup where you can play a small little bounce from the entry to the breakout level, the 100% where you were at. Okay, guys, you can combine this with support and resistance. You can combine this with trend lines. You can also combine this with Fibonacci, right? So the key is what I call Fibonacci confluence. Try to at least find 2. You can find 2 that lines up is great, right? So you got your Fibonacci extension, right? You got Fibonacci retracement over here. You got Fibonacci expansion, and you got Fibonacci projection. Okay. This fall, you minimally must have 2. I usually like to find retracements with projections. They tend to work very well. I like to find extensions with projections too. Okay, I really like to find extensions with projections when they line up over here. 127 and the 61.8 usually works out quite well. Projections and retracements work quite well. Extensions and retracements also work out quite well. Right, and of course, extension and expansions tend to work a little bit less, right? But they can work out well. As a supporting argument, if you get expansion after having the rest, right, it's worth consideration, but I will not use it by itself, right? So I kind of put this maybe in red. Yeah. So if it's a expansion with anything else, it's not effective. But if an expansion as a supplement to the other Fibonacci's, right, it's actually a pretty good setup. Okay. Now, guys, I spent a good 40 minutes explaining Fibonacci to you guys. I'm just going to open the floor for 1 minute for anyone who has questions regarding today's webinar. Right? Does anyone have questions regarding today's webinar? Okay, so now that I'm moving away from the slides, no, from the charts. Turn on my video again. Does anyone have any questions regarding today's webinar? Right, if you know how to master Fibonacci well, it will really help you when you're finding confluence, when finding reversal. It's very effective in finding reversals, less effective in finding breakouts. Okay, now, okay, I can see that there's not many questions coming through, and I appreciate that. I hope the explanation was clear for you guys. Right, thanks for taking the time to come to today's webinar. Right, I hope you found today's session useful. Apply in your trading, whether it's any form of retrace Fibonacci. If you can use it to combine and find areas of confluence, not only with Fibonacci but with other support and resistance, with other price action levels, right, you can actually come up with a very good trading strategy. Okay, now that's it for me, guys, today. Thank you very much for staying throughout. Right, if you have no questions, end today's session. I'll catch you tomorrow for a live trading session. Stay safe, trade safe, and I'll catch you guys tomorrow and next week.